Hey guys. Good afternoon, everybody. It was a little bit last minute, but we decided to go and take a look at the financial results for Nvidia and track their sit in on their earnings call. Their financial results have just been published. I'm trying to get those results out right now. Their lobby is opening up in about 8 minutes. So we'll cover the earnings call for Nvidia. There's bound to be a lot of investor questions from big institutions, especially since they announced a new partnership with Microsoft earlier today. They actually made that announcement at 7 o'clock. Apparently, they're going to work on creating a new supercomputer. Okay, guys. Here we go. Update on short squeeze play. I'm still doing research on it. I'm going to be publishing that soon. It's probably not going to come out this week. I'm actually waiting to publish it once I am confident that this stock has actually put in its floor. Just because I'm not interested in creating bag holders. So I'm waiting to see if it will put in a new low before I publish the information. A squeeze in this company wouldn't be imminent, so I'm not worried about it just suddenly taking off without me or any of us. So there's no rush on this. But don't worry, I will publish this with plenty of time for retail to catch a ride. All right. So I've got the Nvidia chart up here. I'm going to go ahead and get rid of my watch list. Make some room here on the chart. Zoom in nice and big for everybody. And drop this down to the 3-minute chart. So up here you can see where my entry was. I got into a very large position that is currently depreciating in after hours, but we have to go over the financial results. Institutions and their AI are leaping on decisions right now. So this doesn't change anything for us, at least not yet. Okay. So I will bring TradingView over here. And I'll go scroll through the earnings on the financial results. So here we go. If you guys are just joining, thank you for being part of the stream. If you wouldn't mind, leave a like, share the link to this video on social media if you could. That way we can get a few more people in here and share the results of NVIDIA's financial results. Currently, I am in a short position on NVIDIA, which you can see is documented there on the upper right-hand corner of the screen. You should see that the NVIDIA chart is showing a little bit of momentum to the upside right now. Our focus is going to be on the financial results for the time being, and then we will join the investor call in 20 minutes. So data center revenue of $3.83 billion is up 31% from a year ago. Quarterly return to shareholders of $3.75 billion. For the period ending October 30th, their revenue is $5.93 billion, down 17% from a year ago and down 12% from the previous quarter. So a quarter-over-quarter drop. Their earnings expectations were for there to be actually more than a... They were expecting a estimated 70 cents earnings per share, and they disappointed by 17.76%. There was a slight surprise in revenue, up 2.6% based on these numbers. The overall drop in revenue was not unexpected. So the CEO has left a statement: "We are quickly adapting to the macro environment, correcting inventory levels, and paving the way for new products. The ramp of our new platforms, Ada Lovelace RTX graphics, Hopper AI computing, Blue Field, and quantum networking, Orin for autonomous vehicles and robotics, and Omniverse is off to a great start and forms the foundation of our next phase of growth." Which is a it's a lot of fancy talk to say that we have too much inventory. We're trying to reduce it, but sales are slowing. The correction of inventory levels is stating that they are having trouble getting semiconductor material to continue building their cards and semiconductor material for their new computing projects. As of October 30th, the company has a $8.28 billion remaining, $8.28 billion remaining under its share repurchase authorization through December of 2023. So eventually the company will be buying back stock, but I don't think that they believe that this is the bottom of their chart right now. So the company spent almost no money buying back stock. They had promised to spend the better part of their $8 billion share repurchase program by the end of next year. That tells us that they are not in a buying mood right now. Insider buys on Nvidia are not there. Let me go and review this with Ortex just to see what the latest insider buying transactions do look like. So they have made direct sales all the way down. There's been no major purchases. They had a big pop in the share price as of the last couple of weeks during this last bear market rally, but they haven't made any purchases. So no purchases at all. So Nvidia is not expressing any faith in their own stock to hold up where it currently is. And based on the trend of the market, I would estimate that once they break down and turn around from this high, Nvidia, I was expecting to actually at some point retest its pre-pandemic high at around, this would be at $75.88. I at least expect it to break below 100 over the long term during this entire bear market. But that's what we're looking at so far. Okay. Yep, calls in 15 minutes there, Notepad. I'm already logged into it. I'm just sitting here waiting for the... let me go ahead and mute the music. See, we got the earnings call ready to go. I'm just going to turn the sound way down because I don't want to get copyright strike from whatever it is they're playing. All right. So quarterly revenue trend shows that their revenue is slowing quickly. It's plateaued in the last. It's plateaued pretty badly in the last 3 quarters in a row. They're at three. They were at 3.75 billion 2 quarters ago. Now they're at 3.83 billion this quarter. So their revenue growth has slowed substantially. Their gaming sales for their GPUs has dropped massively. They're down more than 50%, almost 60% on their revenue based on their gaming GPU platforms. Auto platforms is growing slightly. Professional visualization has dropped massively as well. So their revenue has more than peaked. It's dropping fast. And now they're back to a Q1 they're back to Q1 2022 levels of revenue. At this point, I'm expecting Nvidia to announce more layoffs to cut their expenses because their revenue isn't strong enough to support that. Their gross margin, okay, they have dropped. Nope, their operating expenses are still up. So their gross margin is growing. Okay, their outlook for Q4 is expected to be $6 billion in revenue, plus or minus 2%. GAAP and non-GAAP gross margins are expected to be 63.2% and 66% respectively, plus or minus 50 basis points. Operating expenses are expected to be approximately $2.56 billion and $1.78 billion respectively. So they are targeting to try to drop their expenses only slightly. Yeah, these are not good. These are not good numbers for Nvidia. They recently started selling their new RTX 4000 series GPUs. They're really pushing it, but sales shows that there's not very much interest. Their sales numbers are dropping so fast. Their partnership with the auto industry to put new GPUs in their systems, I assume for yeah, these are for the central computer systems for most of these electric vehicles. So electric vehicle industry, which is producing more and more product, are asking more from Nvidia to produce embedded chipsets for the computer system of the vehicles. Okay, let's take a look at this. Man, the drop in revenue year over year is just so staggering. Okay, so what does their balance sheet look like? They've burned through about 33% of their cash. A little more than that. Their accounts receivables have grown ever so slightly, probably because of the car market, the auto market. Their inventory is massive. So they are having trouble getting semiconductors to buy. They're having trouble getting materials for their semiconductors to buy, build more product. Their inventory is totally overstocked, and they overstock their inventory based on the expectation that their sales growth would continue. So they didn't pivot quickly enough. So they're sitting on old inventory of graphics cards that nobody wants anymore. The crypto market is bleeding dry. Their biggest growth in their sector is the auto industry, and it's exclusively for electric vehicles, which are quickly pricing out most consumers. Wow. This is not a good earnings report. I don't know why the market was pushing. Their short-term debt exploded over uh, from the beginning of the year to now. They've added more than 50% to their liabilities on their balance sheet. Their long-term debt is reduced, but they took on a lot of short-term debt and liability. Shareholder equity is dropping fast. It's like a 5,000. It's a five, or it's a 5 million. What is this? It's millions. Oh, this is in millions. So that's a $5 billion drop in shareholder equity. A little less than 4 billion drop in the liabilities and equity combined. Obviously, Nvidia is still profitable, but the speculation that their company was going to continue growing throughout this has just been shot out of the water. They're holding on to old inventory. So let's recap. Nvidia is holding on to a huge amount of old inventory. They're trying to sell a new product, the Nvidia RTX 4K series, which needs new semiconductors that they're not getting enough of. They're overpriced because of the conflict between China and the US over Taiwan. Nvidia is still, I've seen the prices of their graphics cards. They're still overpriced. They're still way, way overpriced for the cost of production. And nobody's interested. Like, nobody's buying right now. Where's their advertising expenses? I want to see where they are on advertising. Yeah, they're burning cash fast. Quarter over quarter, their SGA expenses are about 444 billion. Is that what this is? I can't, they didn't give a figure for this. This is supposed to be in millions. So 44 million, 44 million. Okay. True Damon. That's actually what the name is supposed to be, but I changed the spelling of it. Thank you very much, Persephone. Yeah, if you guys are finding this helpful, be sure to leave a like on the stream to get more people in here, and subscribe to the channel for more information like this. I do this as often as I can, and every single one of those likes, subscriptions helps out the YouTube algorithm and gets this information to more people. All right. So that's it for everything. They didn't put details on their advertising costs. I was hoping that they would, because that tells a story. Everybody else across the tech industry has been dropping their earnings expense or their advertising expenses because they don't expect sales to continue. And if Nvidia was still spending a lot of money on advertising, then that's just nothing but a cash sink, because it would indicate that they're hoping to get more inventory off of their out of their stock in order to make room for the new RTX cards. And it's just not moving. Yeah, Nvidia earnings is extremely bad. But their earnings were bad last quarter, and the stock went up the following morning and then gapped down the next day and completely whipsawed people out. So if you're already in Nvidia for a short position, long term you will be correct. I feel that's just my opinion. We obviously are going to be subject to whatever the market decides to do. But this earnings report is not good. It's actually very bad. They've been spending the same amount of money. They've barely reduced their expenses, and they're holding on to inventory that they can't move. The crypto market is gone. Nobody's interested in buying miners, which was actually the big bulk of Nvidia's product moving out of stores. The 4,900 is a New York apartment. Now let's take a look at the SOX semiconductor index. Yeah, we have an abandoned baby on the SOX index. That's clearly an abandoned baby candle, and it rejected off of the 200 EMA on the daily. Like that's big. This tells me everything I need to know. The market is going to turn on the semiconductors industry. It's way overbought. So if you are in puts in Nvidia, I hope that they are for a long duration. If you are short on Nvidia for the next 2 weeks, congratulations. I think that you are spot on your trade. We have the investor call happening in just a minute. We'll be getting started. I'm going to go ahead and get connected to that. Okay, still music right now. Let me actually mute my background so that I can check and see when they start this. Yep. That music is definitely copyright. I cannot let that go over the stream. Okay. All right, we're getting started right now. I'm gonna mute myself and turn it over to the call. We'll leave it to NVIDIA to make their new report.
All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, again, press the star 1. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the third quarter of fiscal 2023. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the fourth quarter and fiscal 2023. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, November 16, 2022, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Simona. Q3 revenue was $5.93 billion, down 12% sequentially and down 17% year-on-year. We delivered record data center and automotive revenue, while our gaming and pro visualization platforms declined as we worked through channel inventory corrections and challenging external conditions. Starting with data center, revenue of $3.83 billion was up 1% sequentially and 31% year-on-year. This reflects very solid performance in the face of macroeconomic challenges, new export controls, and lingering supply chain disruptions. Year-on-year, growth was driven primarily by leading U.S. cloud providers and a broadening set of consumer internet companies for workloads such as large language models, recommendation systems, and generative AI. As the number and scale of public cloud computing and internet service companies deploying NVIDIA AI grows, our traditional hyperscale definition will need to be expanded to convey the different end market use cases. We will align our data center customer commentary going forward accordingly. Other vertical industries such as automotive and energy also contributed to growth with key workloads relating to autonomous driving, high-performance computing, simulations, and analytics. During the quarter, the U.S. government announced new restrictions impacting exports of our A100 and H100 based products to China and any product destined for certain systems or entities in China. These restrictions impacted third quarter revenue, largely offset by sales of alternative products into China. That said, demand in China more broadly remains soft, and we expect that to continue in the current quarter. We started shipping our flagship H100 data center GPU based on the new Hopper architecture in Q3. H100-based systems are available starting this month from leading server makers including Dell, Hewlett-Packard Enterprise, Lenovo, and Supermicro. Early next year, the first H100-based cloud instances will be available on Amazon Web Services, Google Cloud, Microsoft Azure, and Oracle Cloud Infrastructure. H100 delivered the highest performance and workload versatility for both AI training and inference in the latest MLPerf industry benchmarks. H100 also delivers incredible value compared to the previous generation for equivalent AI performance It offers 3x lower total cost of ownership while using 5x fewer server nodes and 3.5x less energy. Earlier today, we announced a multi-year collaboration with Microsoft to build an advanced cloud-based AI supercomputer to help enterprises train, deploy, and scale AI, including large, state-of-the-art models. Microsoft Azure will incorporate our complete AI stack, adding tens and thousands of A100 and H100 GPUs, Quantum 2 400 gigabit per second InfiniBand networking, and the NVIDIA AI Enterprise software suite to its platform. Oracle and NVIDIA are also working together to offer AI training and inference at scale to thousands of enterprises. This includes bringing to Oracle Cloud Infrastructure the full NVIDIA accelerated computing stack and adding tens of thousands of NVIDIA GPUs, including the A100 and H100. Cloud-based high-performance computing company Rescale is adopting NVIDIA AI Enterprise and other software to address the industrial scientific community's rising demand for AI in the cloud. NVIDIA AI will bring new capability to Rescale's high-performance computing as a service offerings, which include simulation and engineering software used across industries. Networking posted strong growth driven by hyperscale customers and easing supply constraints. Our new Quantum 2 40 gigabit per second InfiniBand and Spectrum Ethernet networking platforms are building momentum. We achieved an important milestone this quarter with VMware, whose leading server virtualization platform, vSphere, has been re-architected over the last 2 years to run on DPUs and now supports our Bluefield DPUs. Our joint enterprise AI platform is available first on Dell PowerEdge servers. The Bluefield DPU design win pipeline is growing, and the number of infrastructure software partners is expanding, including Arista, Checkpoint, Juniper, Palo Alto Networks, and Red Hat. The latest top 500 list of supercomputers released this week at Supercomputing 22 has the highest ever number of NVIDIA-powered systems, including 72% of the total and 90% of new systems on the list. Moreover, NVIDIA powers 23 of the top 30 of the Green 500 list, demonstrating the energy efficiency of accelerated computing. The number one most energy efficient system is the Flatiron Institute's Henry, which is the first top 500 system featuring our H100 GPUs. At GTC, we announced the NVIDIA Omniverse Computing System, or OVX, reference designs featuring the new L40 GPU based on the Ada Lovelace architecture. These systems are designed to build and operate 3D virtual worlds using NVIDIA Omniverse Enterprise. NVIDIA OVX systems will be available from Inspur, Lenovo, and Supermicro by early 2023. Lockheed Martin and Jaguar Land Rover will be among the first customers to receive OVX systems. We are further expanding our AI software and services offerings with NVIDIA and BioNeMo large language model services, which are both entering early access this month. These enable developers to easily adapt large language models and deploy customized AI applications for content generation, text summarization, chatbox, code development, protein structure, and biomolecular property predictions. Moving to gaming. Revenue of $1.57 billion was down 23% sequentially and down 51% from a year ago, reflecting lower sell-in to partners to help align channel inventory levels with current demand expectations. We believe channel inventories are on track to approach normal levels as we exit Q4. Sell-through for our gaming products was relatively solid in the Americas and EMEA, but softer in Asia-Pac as macroeconomic conditions and COVID lockdowns in China continued to weigh on consumer demand. Our new Ada Lovelace GPU architecture had an exceptional launch. The first Ada GPU, the GeForce RTX 4090, became available in mid-October amid tremendous demand and positive feedback from the gaming community. We sold out quickly in many locations and are working hard to keep up with demand. The next member of the Ada family, RTX 4080, is available today. The RTX 40 series GPUs features DLSS 3, the neural rendering technology that uses AI to generate entire frames for faster gameplay. Our third generation RTX technology has raised the bar for computer graphics and helped supercharge gaming. For example, the 15-year-old classic game Portal, now reimagined with full ray tracing and DLSS 3, has made it on Steam's top 100 most wish-listed games. The total number of RTX games and applications now exceeds 350. There is tremendous energy in the gaming community that we believe will continue to fuel strong fundamentals over the long term. The number of simultaneous users on Steam just hit a record of 30 million, surpassing the prior peak of 28 million in January. Activision's Call of Duty Modern Warfare 2 set a record for the franchise with more than 800 million in opening weekend sales, topping the combined box office openings of movie blockbusters Top Gun Maverick and Doctor Strange in the Multiverse of Madness. And this month's League of Legends World Championship in San Francisco sold out in minutes, with 18,000 esports fans packed the arena where the Golden State Warriors play. We continue to expand the GeForce Now cloud gaming service. In Q3, we added over 85 games to the library, bringing the total to over 1,400. We also launched GeForce Now on the new gaming devices, including Logitech Cloud G handheld, cloud gaming Chromebooks, and Razer 5G Edge. Moving to ProViz. Revenue of $200 million was down 60% sequentially and down 65% from a year ago, reflecting lower sell-in to partners to help align channel inventory levels with the current demand expectations. These dynamics are expected to continue in Q4. Despite near-term challenges, we believe our long-term opportunity remain intact, fueled by AI, simulation, computationally intensive design and engineering workloads. At GTC, we announced NVIDIA Omniverse Cloud Services, our first software and infrastructure as a service offering, enabling artists, developers, and enterprise teams to design, publish, and operate metaverse applications from anywhere on any device. Omniverse Cloud Services runs on Omniverse Cloud Computer, a computing system comprised of NVIDIA OVX for graphics and physics simulation, NVIDIA HGX for AI workloads, and the NVIDIA Graphics Delivery Network, a global-scale distributed data center network for delivering low-latency metaverse graphics on the edge. Leaders in some of the world's largest industries continue to adopt Omniverse. Home improvement retailer Lowe's is using it to help design, build, and operate digital twins for their stores. Charter Communications and advanced analytics company Heavy AI are creating Omniverse-powered digital twins to optimize Charter's wireless network. And Deutsche Bahn, operator of Germany's national railway, is using Omniverse to create digital twins of its rail network and train AI models to monitor the network, increasing safety and reliability. Moving to automotive, revenue of $251 million increased 14% sequentially and 86% from a year ago. Growth was driven by an increase in AI automotive solutions as our customers' drive Orin-based production ramps continue to scale. Automotive has great momentum and is on its way to be our next multi-billion-dollar platform. Volvo Cars unveiled the all-new flagship Volvo EX90 SUV powered by the NVIDIA Drive platform. This is the first model to use Volvo's software-defined architecture with a centralized core computer containing both Drive Orin and Drive Xavier, along with 30 sensors. Other recently announced design wins and new model introductions include Hozon, Otto, Neo, Polestar, and XPeng. At GTC, we also announced that NVIDIA Drive Thor Superchip, the successor to Orin in our automotive SoC roadmap. Drive Thor delivers up to 2,000 teraflops of performance and leverages technologies introduced in our Grace, Hopper, and Ada architectures. It is capable of running both the automated drive and in-vehicle infotainment systems, simultaneously offering a leap of performance while reducing costs and energy consumption. Drive Thor will be available for automakers' 2025 models, with Geely-owned automaker Zeekr as the first announced customer. Moving to the rest of the P&L, GAAP gross margins was 53.6%, and non-GAAP gross margins was 56.1%. Gross margins reflects $702 million in inventory charges, largely related to lower data center demand in China, partially offset by a warranty benefit of approximately $70 million. Year-on-year, GAAP operating expenses were up 31%, and non-GAAP operating expenses were up 30%, primarily due to higher compensation expenses related to headcount growth and salary increases, and higher data center infrastructure expenses. Sequentially, both GAAP and non-GAAP operating expense growth was in the single-digit %, and we plan to keep it relatively flat at these levels over the coming quarters. We returned $3.75 billion to shareholders in the form of share repurchases and cash dividends. At the end of Q3, we had approximately $8.3 billion remaining under our share repurchase authorization through December 2023. Let me turn to the outlook for the fourth quarter of fiscal 2023. We expect our data center revenue to reflect early production shipments of the H100, offset by continued softness in China. In gaming, we expect to resume sequential growth with our revenue still below end demand as we continue to work through the channel inventory correction. And in automotive, we expect the continued ramp of our Orin design wins. All in, we expect modest sequential growth driven by automotive, gaming, and data center. Revenue is expected to be $6 billion, plus or minus 2%. GAAP and non-GAAP gross margins are expected to be 63.2% and 66%, respectively, plus or minus 50 basis points. GAAP operating expenses are expected to be approximately $2.56 billion. Non-GAAP operating expenses are expected to be approximately $1.78 billion. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $40 million, excluding gains and losses on non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 9%, plus or minus 1%, excluding any discrete items. Capital expenditures are expected to be approximately $500 million to $550 million. Further, financial details are included in the CFO commentary and other information available on our IR website. In closing, let me highlight upcoming events for the financial community. We'll be attending the Credit Suisse Conference in Phoenix on November 30th, the Arete Virtual Tech Conference on December 5th, and the JP Morgan Forum on January 5th in Las Vegas. Our earnings call to discuss the results of our fourth quarter and fiscal 2023 are scheduled for Wednesday, February 22nd. We will now open the call for questions. Operator, could you please poll for questions?
Thank you. I would like to remind everyone, in order to ask a question, press star, then the number 1 on the telephone keypad. As a reminder, please limit yourself to one question. We will pause for just a moment to compile the Q&A roster. Your first question comes from the line of Vivek Arya with Bank of America Securities. Your line is now open.
Thanks for taking my question. Colette, I just wanted to clarify first. I think last quarter you gave us a sell-through rate for your gaming business at about $2.5 billion a quarter. I think you said China is somewhat weaker, so I was hoping you could update us on what that sell-through rate is right now for gaming. And then, Jensen, the question for you, a lot of concerns about large hyperscalers cutting their spending and pointing to a slowdown. So if, let's say, U.S. cloud CapEx is flat, or slightly down next year, do you think your business can still grow in the data center, and why?
Yes, thanks for the question. Let me first start with the sell-through on our gaming business. We had indicated if you put 2 quarters together, we would see approximately $5 billion in normalized sell-through for our business. Now, during the quarter, sell-through in Q3 was relatively solid. We've indicated that although China lockdowns continue to challenge our overall China business, it was still relatively solid. Notebook sell-through was also quite solid, and desktop a bit softer, particularly in that China and Asia areas. We expect, though, stronger end demand, though, as we enter into Q4, driven by the upcoming holidays, as well as the continuation of the Ada adoption.
Vivek, our data center business is indexed to 2 fundamental dynamics. The first has to do with general purpose computing no longer scaling, and so acceleration is necessary to achieve the necessary level of cost efficiency scale and energy efficiency scale so that we can continue to increase workloads while saving money and saving power. Accelerated computing is recognized generally as the path forward as general purpose computing slows. The second dynamic is AI, and we're seeing surging demand in some very important sectors of AI, in important breakthroughs in AI. One is called deep recommender systems, which is quite essential now to get the best content or item or product to recommend to somebody who's using a device that is, like a cell phone or interacting with a computer just using voice. You need to really understand the nature, the context of the person making the request and make the appropriate recommendation to them. The second has to do with large language models. This started several years ago with the invention of the transformer, which led to BERT, which led to GPT-3, which led to a whole bunch of other models now associated with that. We now have the ability to learn representations of languages of all kinds. It could be human language, it could be the language of biology, it could be the language of chemistry. And recently, I just saw a breakthrough called Genes LLM, which is one of the first example of learning the language of human genomes. The third has to do with generative AI. You know that the first 10 years we've dedicated ourselves to perception AI. The goal of perception, of course, is to understand context, but the ultimate goal of AI is to make a contribution, to create something, to generate product. And this is now the beginning of the era of generative AI. You probably see it all over the place, whether they're generating images or generating videos or generating text of all kinds. And the ability to augment our performance, to enhance our performance, to make productivity enhanced, to reduce cost, and improve whatever we do with whatever we have to work with, productivity is really more important than ever. And so you could see that our company is indexed to 2 things, both of which are more important than ever, which is power efficiency, cost efficiency, and then of course productivity. And these things are more important than ever. And my expectation is that we're seeing all this strong demand and surging demand for AI for these reasons.
Your next question comes from the line of CJ Muse with Evercore. Your line is now open.
Yeah, good afternoon. Thank you for taking the question. You started to bundle NVIDIA AI Enterprise now with the H100. I'm curious if you can talk about how we should think about timing around software monetization and how we should kind of see this flow through the model, particularly with a focus on the AI Enterprise and Omniverse side of things. Thank you.
Yeah, thanks, CJ. We're making excellent progress in NVIDIA AI Enterprise. In fact, you saw probably that we made several announcements this quarter associated with clouds. You know that NVIDIA has a rich ecosystem, and over the years, our rich ecosystem and our software stack has been integrated into developers and startups of all kinds. But more than ever, we're at the tipping point of clouds, and that's fantastic because if we could get NVIDIA's architecture and our full stack into every single cloud, we could reach more customers more quickly. And this quarter, we announced several initiatives. One has several partnerships and collaborations. One that we announced today, which has to do with Microsoft and our partnership there. It has everything to do with scaling up AI because we have so many startups clamoring for large installations of our GPUs so that they could do large language model training and building their startups and scale out of AI to enterprise and all of the world's internet service providers. Every company we're talking to would like to have the agility and the scale flexibility of clouds. And so over the last year or so, we've been working on moving all of our software stacks to the cloud, or of our platform and software stacks to the cloud. And so today we announced that Microsoft and ourselves are going to standardize on the NVIDIA stack for a very large part of the work that we're doing together so that we can take a full stack out to the world's enterprise. That's all software included. We a month ago announced the same similar type of partnership with Oracle. You also saw that Rescale, a leader in high-performance computing cloud, has integrated NVIDIA AI into their stack. Monai has been integrated into GCP. And we announced recently NeMo large language model and BioNeMo large language model to put NVIDIA software in the cloud. And we also announced Omniverse is now available in the cloud. The goal of all of this is to move the NVIDIA platform full stack software into the cloud so that we can engage customers much more quickly, and customers could engage our software if they would like to use it in the cloud. It's per GPU instance hour. If they would like to utilize our software on-prem, they could do it through a software license. And so license and subscription. And so in both cases, we now have software available practically everywhere you would like to engage it. The partners that we work with are super excited about it because NVIDIA's rich ecosystem is global, and this could bring both new consumption into their cloud for both them and ourselves, but also connect all of these new opportunities to the other APIs and other services that they offer. And so our software stack is making really great progress.
Your next question comes from the line of Chris Caso with Credit Suisse. Your line is now open.
Yes, thank you. Good evening. Wonder if you could give some more color about the inventory charges you took in the quarter and then internal inventory in general. in the documentation, you talked about that being a portion of inventory on hand plus some purchase obligations, and you also spoke in your prepared remarks that some of this was due to China data center. So if you can clarify what was in those charges, and then in general for your internal inventory, does that still need to be worked down, and what are the implications as if that needs to be worked down over the next couple of quarters?
Thanks for the question, Chris. So as we highlighted in our prepared remarks, we booked an entry of $702 million for inventory reserves within the quarter. Most of that, primarily all of it, is related to our data center business, just due to the change in expected demand looking forward for China. So when we look at the data center products, a good portion of this was also the A100, which we wrote down. Now, looking at our inventory that we have on hand and the inventory that has increased, a lot of that is just due to our upcoming architectures coming to market. Our Ada architecture, our Hopper architecture, and even more in terms of our networking business. We have been building for those architectures to come to market, and that's what you see. We are always looking at our inventory levels at the end of each quarter for our expected demand going forward, but I think we've done a solid job, at least in this quarter, just based on that expectation going forward.
Your next question comes from the line of Timothy Arcuri with UBS. Your line is now open.
Thanks a lot. Colette, can you, I have a two-part question. First, is there any effect of stockpiling in the data center guidance? I ask because you now have the A800 that is sort of a modified version of the A100 with the lower data transfer rate. So one could imagine that customers might be stocking that while they can still get it. And I guess the second part of that is related to the inventory charge. Can you just go into that a little bit more? Because last quarter it made sense that you took a charge because, revenue was less than you thought, but revenue came in pretty much in line, and it sounded like China was a net neutral. So is the charge related to just, working A100 inventory down faster? Is that what the charge is related to? Thanks.
Sure. So let me talk about the first statement that you indicated. Most of our data center business that we see is we're working with customers specifically on their needs to build out accelerated computing and AI. It's just not a business in terms of where units are being held for that. They're usually for very, very specific products and projects that we see. So I'm going to answer no, nothing that we can see. Your second question regarding the inventory provisions. At the end of last quarter, we were beginning to see softness in China. We have always been looking at our needs long term. It's not a statement about the current quarter in inventory. As you can see, it usually takes 2 or 3 quarters for us to build product for the future demand. So that's always a case of the inventory that we are ordering. So now looking at what we've seen in terms of continued lockdowns, continued economy challenges in China, it was time for us to take a hard look of what do we think we'll need for data center going forward, and that led to our write-downs.
Your next question comes from the line of Stacy Rasgon with Bernstein. Your line is now open.
Hi, guys. Thanks for taking my question. Colette, I had a question on the commentary you gave on the sequentials. It kind of sounded like data center maybe had some China softness issues. You said gaming resuming sequential growth, but then you said sequential growth for the company driven by auto, gaming, and data center. How can all three of those grow sequentially if the overall guide is kind of flattish? Are they all just growing just a little bit, or is one of them actually down? How do we think about the segments into Q4 given that commentary?
Yes, thanks, Stacy. So your question is regarding the sequentials from Q3 to our guidance that we provided for Q4. As we are seeing the numbers in terms of our guidance, you're correct, is only growing about $100 million, and we've indicated that 3 of those platforms will likely grow just a little bit. But our pro visualization business, we think is going to be flattish, and likely not growing as we're still working on correcting the channel inventory levels to get to the right amount. It's very difficult to say which will have that increase, but again, we are planning for all three of those different market platforms to grow just a little bit.
Your next question comes from the line of Mark Lipacis with Jefferies. Your line is now open.
Hi, thanks for taking my question. Jensen, I think for you, you've articulated a vision for the data center where a solution with an integrated solution set of a CPU, GPU, and DPU is deployed for all workloads or most workloads, I think. Could you just give us a sense of or talk about where is this vision in the penetration cycle, and maybe talk about Grace's importance for realizing that vision? What will Grace deliver versus an off-the-shelf x86? Do you have a sense of where Grace will get embraced first or the fastest within that vision? Thank you.
Thanks, Mark. Grace's data moving capability is off the charts. Grace also is memory coherent to our GPU, which allows our GPU to expand its effective GPU memory, fast GPU memory, by a factor of 10. That's not possible without special capabilities that are designed between Hopper and Grace and the architecture of Grace. And so it was designed, Grace is designed for very large data processing at very high speeds. Those applications are related to, for example, data processing. It's related for recommender systems, which operates on petabytes of live data at a time. It's all hot. It all needs to be fast so that you can make a recommendation within milliseconds to hundreds of millions of people using your service. It is also quite effective at AI training, machine learning. And so those kind of applications are really terrific. We
do not care
Grace,
about AI
I think,
training.
I've said before that we will have production samples in Q1, and we're still on track to do that.
Your next question comes from the line of Harlan Sur with JP Morgan. Your line is now open.
Good afternoon. Thanks for taking my question. Your data center networking business, I believe, is driving about $800 million per quarter in sales. Very, very strong growth over the past few years. Near term, as you guys pointed out, and the team is driving strong NIC and Bluetooth attached to your own compute solutions like DGX and more partner announcements like VMware. But we also know that networking has pretty large exposure to general purpose cloud and hyperscale compute spending trends. So what's the visibility and growth outlook for the networking business over the next few quarters?
Yeah, if I could take that. First, thanks for the question. Our networking, as you know, is heavily indexed to high performance computing. We don't serve the vast majority of commodity networking. All of our networking solutions are very high end, and they're designed for data centers that move a lot of data. Now, if you have a hyperscale data center these days, and you are deploying a large number of AI applications, it is very likely that the network bandwidth that you provision has a substantial implication on the overall throughput of your data center. So the small incremental investment they make in high performance networking translates to billions of dollars of savings, frankly, in provisioning the service, or billions of dollars more throughput, which increases their economics. And so these days, with disaggregated and AI application, AI provisioning in data centers, high-performance networking is really quite fantastic, and it pays for itself right away. But that's where we are focused. In high-performance networking and provisioning AI services, in the AI applications that we focus on. You might have noticed that NVIDIA and Microsoft are building one of the largest AI infrastructures in the world, and it is completely powered by NVIDIA's InfiniBand 400 gigabits per second network. And the reason for that is because that network pays for itself instantaneously. The investment that you're going to put into the infrastructure is so significant that if you were to be dragged by slow networks, obviously the efficiency of the overall infrastructure is not as high. And so in the places where we focus, networking is really quite important. It goes all the way back to when we first announced the acquisition of Mellanox. I think at the time, they were doing about a few $100 million a quarter, about $400 million a quarter. And now we're doing what they used to do in the old days, in a year, practically coming up in a quarter. And so that kind of tells you about the growth of high-performance networking. It isn't indexed to overall enterprise and data center spend, but it is highly indexed to AI adoption.
Your next question comes from the line of Aaron Rakers with Wells Fargo. Your line is now open.
Yeah, thanks for taking the question. I want to expand on the networking question a little bit further. When we look at the Microsoft announcement today, we think about what Meta is doing on the AI footprint that they're deploying. Jensen, can you help us understand where your InfiniBand networking sits relative to traditional data center switching, and maybe kind of build on that how you're positioning Spectrum 4 in the market? Does that compete against a broader set of opportunities in the Ethernet world for AI fabric networking? Thank you.
Yeah, thanks, Aaron. The math is like this. If you're going to spend $20 billion on an infrastructure and the efficiency of that overall data center is improved by 10%, the numbers are huge. And when we do these large language models and recommender systems, the processing is done across the entire data center. And so we distribute the workload across multiple GPUs, multiple nodes, and it runs for a very long time. And so the importance of the network can't be overemphasized. And so the difference of 10% in overall improvement in efficiency, which is very easy to achieve. The difference between NVIDIA's InfiniBand, the entire software stack, with what we call Magnum I/O, which allows us to do computing in the network itself. A lot of software is running in the network itself, not just moving data around. We call it in-network computing because a ton of software is done at the edge of within the network itself. We achieve significant differences in overall efficiency. And so if you're spending billions of dollars on the infrastructure, or even hundreds of millions of dollars on the infrastructure, the difference is really quite profound.
Your next question comes from the line of Ambrish Srivastava with BMO. Your line is now open.
Hi, thank you very much. I actually had a couple of clarifications. Colette, on the data center side, is it a fair assumption that compute was down Q-over-Q in the reported quarter because the quarter before, Mellanox or the networking business was up as it was called out, and again, you said it grew quarter over quarter. So is that a fair assumption? And then I had a clarification on the USG ban. Initially, it was supposed to be a $400 million. Really going.
I'm going to interrupt them really quickly just to share something that was provided by a member of the Discord, Tip Flickering. There was a report by Bloomberg that AI's best AI offerings are now subject to licensing requirements for export to China, a hurdle that the company said may cost it hundreds of millions of dollars in lost revenue. Nvidia recently debuted a new offering for that market that says is compliant with the restrictions. This actually directly throws a massive wrench in their gears for their AI offering and their data center offering, because the AI is what they're pushing the most about this. So now up front, before they've even gotten to start selling the product, it's now worth far less in revenue than they even anticipated.
For export control. And it cannot be customer reprogrammed or application reprogrammed to exceed it. It is hardware limited. It is in the hardware that determines 8800's capabilities. And so it meets the clear test in letter and in spirit. We raised the concern about the $400 million of A100s because we were uncertain about whether we could execute the introduction of A800 to our customers and through our supply chain in time. The company did remarkable feats to swarm this situation and make sure that our business was not affected and our customers were not affected. But A800 hardware surely ensures that it always meets U.S. government's clear.
This dude is not confident with the way that he is describing the way that they navigated this situation. They're losing money in every area of their business, with the only exception being the auto market.
Securities. Your line is now open.
God.
Thank you. I'm hoping you can discuss the pace of H100 growth as we progress over the next year. We've gotten a lot of questions as to whether the ramp in this product should look like a sort of traditional product cycle where there's quite a bit of pent-up demand for this significant improved performance product, and that there's supply available as well. So does this rollout sort of look relatively typical from that perspective, or should we expect a more perhaps delayed start of the growth trajectory where we see maybe substantially more growth in, let's say, second half of 23?
H100 ramp is different than the A100 ramp in several ways. The first is that the TCO, the cost benefits.
Okay, I'm really struggling to listen to these guys anymore. I'm sure you guys are all really bored of them too. They are talking about literally nothing. They're focused in on this AI shit just because it's the buzzword of the century, and it's not even generating revenue for them. This is a cost sink. So this is not something that they're going to even start making money on until at the earliest late 2023. And I think that that's extremely bold of them to assume. They started this new project with Microsoft to start building quantum computers for the cloud, which again is a massive time and money sink. They're still prototype devices. I don't even understand why NVIDIA is even thinking about spending this money on this pet project when they are having this massive shortage of semiconductor material, and they're all focused on cloud networking and computing for these new fancy data center systems. They aren't even in a position to supply enough of the cards that they do make to the market in front of them. And they have this glut of inventory that they're still dealing with. So, I mean, we can keep listening to the rest of the call, but they've said everything that I needed to hear to draw my own conclusions over this. as you just said, just a man, the innovation is nice and all, but this is going to come with such substantial costs that I don't think that NVIDIA can even hope to sustain the cash drain that this is going to put on their balance sheet. So they're losing money hand over fist. They spent they spent a massive percentage of their cash on hand, and their cash receivables are declining rapidly. Let's check out this next question.
That you had talked about maybe a new way of commenting on or reporting hyperscaler revenue in your data center business. And I wondered if you could maybe give us a little bit more detail about what you're thinking there and what sort of drove the decision. And I guess the derivative of that, Jensen, how that decision to talk about the data center business to hyperscalers differently, I mean, what does that mean for the business? That it's just a reflection of where demand is and you're going to break things out differently, or is something changing about the mix of, I guess, internal properties versus vertical industry demand within the hyperscale customer base? Thank you.
Yeah, Matt, thanks for the question. Let me clarify a little bit in terms of what we believe we should be looking at when we go forward and discussing our data center business. Our data center business is becoming larger and larger, and our customers are complex. Now, when we talk about hyperscale, we tend to talk about 7, 8 different companies, but the reality is there's a lot of very large companies that we could add to that discussion based on what they're purchasing. Additionally, looking at the cloud, looking at our cloud purchases and what our customers are building for the cloud is an important area to focus on, because this is really where our enterprise is, where our researchers, where our higher education is also purchasing. So we're trying to look for a better way to describe the color of what we're seeing in the cloud and also give you a better understanding of some of these large installments that we're seeing in the hyperscales.
Yeah, let me double click on what Colette just said, which is absolutely right. There are 2 major dynamics that's happening. First, the adoption of NVIDIA AI in internet service companies around the world. The number and the scale by which they're doing it has grown a lot. Internet service companies and these are internet service companies that offer services, but they're not public cloud computing companies. The second factor has to do with cloud computing. We are now at the tipping point of cloud computing. Almost every enterprise in the world has both a cloud first and a multi-cloud strategy. It is exactly the reason why all of the announcements that we made this last quarter since GTC, about all the new platforms that are now available in the cloud. A CSP, a hyperscaler, are 2 things to us, therefore. A hyperscaler can be a sell-to customer. They are also a sell-with partner. On the public cloud side of their business, because of the richness of NVIDIA's ecosystem, because we have so many internet service customers and enterprise customers using NVIDIA's full stack, the public cloud side of their business really enjoys and values the partnership with us and the sell-with relationship they have with us. And it's pretty clear now that for all of the hyperscalers, the public cloud side of their business will very likely be the vast majority of their overall consumption. And so because the world's CSPs, the world's public clouds is only at the early innings of their lifting enterprise to the cloud world, it's very, very clear that the public cloud side of the business is going to be very large. And so increasingly, our relationship with CSPs, our relationship with hyperscalers, will include, of course, continue to sell to them for internal consumption, but very importantly, sell with for the public cloud side.
Your next question comes from the line of Joseph Moore with Morgan Stanley. Your line is now open.
Great, thank you. I wonder if you could talk to, looking backward at the crypto impact,
Finally.
That's gone from your numbers now, but do you see any potential for liquidation of GPUs that are in the mining network, any impact going forward? And do you foresee blockchain being an important part of your business at some point down the road?
We don't expect to see blockchain being an important part of our business down the road.
There you go.
There is always a resale market. If you look at any of the major resale sites, eBay, for example, there are secondhand graphics cards for sale all the time, and the reason for that is because a 3090 that somebody bought today is upgraded to a 4090, or 3090 they bought a couple of years ago is upgraded to a 4090 today. That 3090 could be sold to somebody and enjoyed if sold at the right price. And so the volume of the availability of secondhand and used graphics cards has always been there, and the inventory is never zero. And when the inventory is larger than usual, like all supply demand, it would likely drift lower price and affect the lower ends of our market. But my sense is that where we're going right now with Ada is targeting very clearly in the upper range, the top half of our market, and early signs are. And I'm sure you're also seeing
Finally, let me get some cactuses in the chat, please. That 4090. This guy from Morgan Stanley is a champion for asking that question, and he had no answer except that retail sales will decline because there is an aftermarket demand for all cards that came out of the crypto space. Their revenue is going to tank for the foreseeable future on all of their cards, and that's why they're going all in into this AI cloud computing bullshit.
And the vibrancy of the gaming market. So we're super enthusiastic about the Ada launch. We have many more Ada products to come.
Your last question today comes from the line of Toshiya Hari with Goldman Sachs. Your line is now open.
Great. Thank you so much for squeezing me in. I had two quick ones for Colette. On supply, I think there was some mixed messaging in your remarks. I think you talked about supply being a headwind at one point, and then
yes.
When you were speaking to the networking business, I think you talked about supply easing. So I was hoping you can kind of speak to supply if you're caught up to demand at this point. And then secondly, just on stock-based compensation, pretty mundane topic, I realize, but it is, I think in the quarter, it was about $700 million. It's becoming a bigger piece of your OpEx. So curious how we should be modeling that going forward. Thank you.
Sure. When we look at our supply constraints that we have had in the past, each and every quarter, this is getting better. Networking was one of our issues probably a year ago, and it has taken us probably to this quarter and next quarter to really see our supply improved so that we can support the pipeline that we have for our customers there. Now, that's our supply. We've also made a discussion regarding our customers' supply constraints issues. When setting up a data center, even getting data center capacity has been very difficult. And therefore, that challenges them in their purchasing decisions as they're still looking for certain parts of that supply chain to come through. So that hopefully clarifies what we were talking about regarding two areas of supply. In our stock-based compensation, what we'll see, it's very difficult to predict what our stock-based compensation would be when it arrives. We have provided
now the market's going to dump on
employees, but also once a year to our employees, and it's a single date in terms of when that is.
Look at that evening star.
So it's difficult to determine, but stock-based compensation is an important part of our employees' compensation and will continue to be. So we look at it from an overall compensation perspective. So up until now, and when we do the focal, we'll see about the same size. With a few additions for the reduced level of employee hiring that we have right now.
Oh, wow. So the
Thank you.
supply
I will now turn the call
inventory
back
is
over to
still
Jensen
heavy.
Huang
They
for
have
closing
caught up
remarks.
with demand. Their problem is
Thanks,
that they
everyone.
do not have
We
the
are quickly
necessary
adapting to
semiconductor
the macro
material
environment.
to make their new chips.
Correcting inventory
They
levels,
just gave all that
offering
information away in
alternative
these
products
last
to
two
data
questions.
center customers
Their
in China,
crypto market is dried up.
and
The
keeping our
aftermarket is
OpEx
ripping.
flat
Their
for the next
inventory
few
is
quarters.
too high, and their sales
Our
are
new
too far down.
platforms are off to a great
Nvidia's
start
going
and
down.
form the foundation
Long
for our
term,
resumed
like
growth.
whatever it does tomorrow,
NVIDIA
I
RTX
don't
is
care.
reinventing
Next
gaming
week
graphics
and the
with
month
ray tracing
after,
and AI.
Nvidia is going on a
The launch of
downtrend.
Ada
This is
Lovelace was
exactly what I
phenomenal.
wanted to hear.
Gamers waited in long lines around the world
Nvidia
for
goofed
40
hard,
million
and now they're
clouds
throwing
sold out
all their
quickly.
money into this AI cloud
Hopper,
computing crap.
with its revolutionary transformer engine, is just in time
Oh
to meet
man,
the
yeah,
surging
Qs are
demand
gonna
for
tank.
recommender systems,
The Qs are gonna
large
drop
language models,
massively.
and
Qs and the
generative AI.
socks.
NVIDIA networking is
AMD
synonymous
might pop in
with the
response
highest
to this.
data center throughput
People
and
might go and
enjoyment
drive all their
record
money over to
results.
AMD because
Orin is the world's
they're
first
ahead of the
computing
game. They
platform
already
designed
cut
for
staff,
AI
they cut
autonomous
expenses,
vehicles
and they
and
drew down their
robotics,
company's
and putting
they drew down their
automotive
company's inventory
on the
months
road
ago.
to be our
Nvidia was
next
ready for
multi-billion
this,
dollar platform.
or AMD was ready
These
for this.
computing
Excuse me.
platforms run
So
embedded
AMD
AI
prepared
and
to weather the
NVIDIA
storm.
automakers,
Nvidia is still spending
software
money like
libraries,
they're
and
living
engines
in
that help
frickin'
the
Vegas.
companies build and deploy
They think they
AI
won the lottery with this
products
last
and
bull
services.
market, and then suddenly they're going to just
NVIDIA's
take up this
pioneering
new
work in
market
accelerated computing
in
is
cloud
more vital
computing.
than ever. Limited by physics, general purpose computing has slowed to a crawl just as AI demands more computing.
Man,
Scaling through general purpose computing alone is no longer viable, both from a cost or power standpoint. Accelerated
how does
computing is the
TSM
path
stand?
forward.
That's a good question.
We
Let's
look
go take
forward
a
to
look at
updating
that.
you on our progress next quarter.
Taiwan Semiconductor Manufacturing.
This concludes today's conference call. Thank you for attending. You may disconnect.
Okay, that's it for that. Bye-bye, NVIDIA. Wow. They goofed so hard. All right, let's go ahead and recap everything that we learned from that earnings call. So, overall, NVIDIA's entire earnings was a gigantic turd burger. They have started draining money so fast. Let me go put my browser back here in the foreground. All right. So, quarterly revenue trend. They're throwing all their money into cloud computing. That's in their data center platform, okay? So this is where all of their expenditure is going, is into developing this cloud computing stuff, okay? Gaming sector, this is made up of everything that has to do with sales of cards directly to gaming platforms like partners that are building gaming GPUs and think like Zotac or MSI. I don't know why I'm like having a brain fart when it comes to like the hardware manufacturers, but Nvidia's GPUs are Asus. Thank you. That's another one. I love Asus. So sales of actual gaming platform GPUs are dropping like a rock. Okay, they've lost 500 million in revenue quarter over quarter in this sector, which used to be their biggest sector. They were driving all of this money into cloud computing, and now, as you can see, just based on the last 3 quarters, they've plateaued. Now they're jumping into this AI cloud computing crap, which they think that by driving more AI-based cloud hardware stuff that's like it's GPUs still, like it's still semiconductors and GPUs, but it's specifically designed to be processed by AI computers, okay? It's got a very specific design. Just like you have ASIC cards for crypto that are specifically designed for the exact mathematical algorithms that are used in crypto, you can have a card that's specifically engineered to work with AI, and it's based on like the API. There's programmable interfaces in the hardware itself, right? The firmware and the technology that it's built on works in tandem with the actual semiconductors and the circuitry. And the best way that I can describe it is they're making an easier language. They're making languages that AI can directly translate to the hardware to make it so that the hardware operates with the littlest latency possible. They're hoping that the AI market is going to continue to grow fast enough to catch up with their declining gaming revenue and the losses that they're experiencing in the OEM market. OEM market and other, this is crypto. This is how far their crypto sales have fallen since Q2 of 2022. They were operating at a 400 million market. They dropped massively quarter over quarter, every single quarter to date. And now it's basically down to 73 million. This was a massive supplement to their market, and it was draining all of the old cards out of the market. So this decline directly translates into a increase or a decline in their gaming sector revenue. Why does that happen? Because the OEM stuff, this is the amount of revenue that they're making selling aftermarket cards, selling repair kits and stuff for old cards. That's what the crypto guys do. They get these old cards, they get aftermarket parts from Nvidia in order to keep them in repair and to keep their crypto mining platforms running. Now that demand has gone away, and that means that their cards are going up on the resale market. So all of those old cards are going up for sale at half the price that the new cards are going for. And even the new line that Nvidia has, their RTX 4K series, those are twice as expensive as the 3K series. And that's for new cards. The 3K series cards that are going up there used are dropping to half price of the new cards. So you have new cards of the old series going for like $500, $600. The aftermarket cards are dropping to like $400. So people are getting all of these old cards that are still just as good for way cheaper than what Nvidia can compete with, because they're still losing a ton of money on their semiconductors, which they're paying for through the nose because of the massive shortage in semiconductor materials. Because you've got electric vehicles, you've got the chipset manufacturers, and you have battery manufacturers that are all exploding. Also, the solar market. Can't forget the solar market. So literally everybody is trying their hardest to put in best bid for raw materials to make these semiconductors, and it's cutting into Nvidia's revenue massively. On top of this research and development for this AI cloud computing crap, which is all experimental, by the way. And the only thing that's growing right now is their auto industry. Their auto embedded chipsets for, think Tesla, Rivian, NIO, Mullen, Volvo. I mean, their partners specifically are like Volvo, Mercedes. There's a couple of other ones. I think they are working with Tesla also. Tesla, the car manufacturer. So all of that being said, like their declines in earnings or their revenue trends are not looking good. Like this is clearly a plateau. It's hard to see with the numbers. If I were to put this on a graph, you would see the data center doing like the data center revenue for Nvidia is basically it's doing this, right? While their gaming sector revenue is doing this. So they're plateauing on their revenue from their data center stuff. Oh, I wasn't showing the right screen. My bad. Their data center revenue looks like this, like a logarithmic curve. It's plateauing big time. Their gaming sector revenue is dropping linearly, very fast. So they're in a race against time to get this sector to become profitable again and start growing before the gaming revenue starts exhausting their cash receivables. And their cash receivables are declining fast. They're burning cash now. And that's going to make it hard for them to buy back their stock once it starts to decline to the lowest prices. They're not going to buy back as much stock as they were hoping for. So Nvidia is spending way too much money right now. They're burning cash way too fast. This is all not good. All not good for NVIDIA. Man, that's... wow. All right, so that brings us all up to speed on what NVIDIA's projection looks like. That's pretty much what this entire stream was for. I did want to spend some time covering any of the other semiconductor-related stuff if you guys are interested. So somebody had asked about TSM, which is the Taiwan Semiconductors Manufacturing Company. This is the #1 manufacturer of semiconductors in the world. And right now, they've been absolutely ripping. This one's ripped more than NVIDIA. They're up 40% over the last 14 days. That's ridiculous. 40% over 14 days. Their RSI is so hot right now. Demand for their product is ridiculous. And this is part of what's propping up the SOX market. So SOX printed this in abandoned baby candle pattern. That's where you have a red candle and then you have another red candle that gaps up above it and then an immediate gap down the day after. This is a very accurate bearish pattern. This is specifically a bearish abandoned baby. You can see its counterpart on this very chart right here. This is a bullish abandoned baby. You have this bullish green doji candle that is has a perfect air gap on both sides of it. You would want to trade this to the upside. There was actually another one right here. This is an evening star. It ended up gapping up in the opposite direction, so this one didn't play out. But out of 2 trades, we would expect this one to play to the downside. So if you're not trading NVIDIA directly, you could look at SOX and the semiconductors index. This one is particularly useful. Another thing that I like to do is to set up SOX divided by the Qs. This is a ratio chart that will tell you what the market performance looks like, SOX versus the Qs. And as you can see, the SOX semiconductors market was outperforming the Qs pretty significantly over the last month. And now we printed this massive drop, this huge abandoned baby candle. This is telling us that SOX is going to start underperforming the Qs. They can still both drop together, but SOX is likely going to drop faster. So SOX will go down faster than the Qs will go down. So it'll look like a slope like so. SOX doing a straight down, Qs kind of drifting down slowly over time. So this was a phenomenal call at the very end. Like, oh man, you had the Bloomberg guy, Morgan Stanley, and UBS coming in at the very end of the call with the most important questions that we needed answered. We needed to know what their position was on their crypto market, which is they do not expect crypto to be a significant source of revenue anymore for the foreseeable future. And the second question that was asked was, what is the supply chain situation and what are your inventory levels? Which their inventory is too high. They've caught up with demand, which is bad. They want to be behind demand so that they can raise the cost of their cards. And now their cards are actually too expensive. Now there's a big aftermarket. There's a big resale market, I should say, for their old cards. And I'm repeating myself at this point for everybody who's been on the call with me the whole time. But for everybody who's still just joining in, I see a few people coming in here after the calls ended. And the message is that NVIDIA has too much supply, too little demand, too expensive of cards. There's too many old cards in the resale market, and their new cards are selling out, but only because they can't get their hands on enough semiconductor material to build them fast enough. So they are behind demand on their new cards only because they can't make enough of them, and they're actually really slowed down on their ability to make them. So this is huge news for the semiconductors market, whether anyone is aware of it or not. This is going to create a big negative response in the market tomorrow. I expect both the SOX and the Qs to drop fast. So We'll expect some volatility coming out tomorrow, but overwhelmingly the message of NVIDIA from this earnings call was that they missed everything. They screwed up so badly, and they're still spending money like they've just got it coming out of their ears, which is not the case anymore. Now their revenue is drying up very quickly, and they're wasting it on this experimental stuff in cloud computing that's not going to mature or start actually growing in any way for at least the next year. Like, not until the very, very end of 2023 at the earliest. More than likely, they're not going to actually see any returns on this stuff until the end of Q3 2024. So NVIDIA is about to have a really bad day tomorrow. This pop, this volatility that happened after hours, don't even care. Literally don't care at all. If I see NVIDIA jump up tomorrow, I'm going to average down on my short positions. NVIDIA is going to have an absolutely terrible quarter this quarter. So the whole semiconductor market pumping the way that it has, just because of the whole deal with this subsidy business from the government, don't trust it. That's all I'm saying. I'm not trusting it. The actual earnings and the performance of the company itself is not where it needs to be to maintain its growth trajectory that Wall Street set for it. They're way too optimistic. I don't think there's going to be... I think that whatever Christmas pump there was that was going to happen has already occurred here. I think that the entire semiconductors market is about to turn around really quickly. Yep. Yeah, if you guys are interested in leverage as well, there are several of those that you can look to. So if you want to go short on Qs, I actually did take this bet. I went long on SQ. This is short 3 times leverage on the Qs sector, which is very, very tech heavy. Does have a lot of semiconductors. You can see that we had this bull hammer that showed up. Is kind of like an abandoned baby, but these wicks intersect. It's still a bullish setup, but not the same as an abandoned baby candle. I don't want to get people confused. But anyway, we're not worried about technicals on SQs. What we're really concerned with is what the technicals look like on the Qs. And if you go out to the daily chart here you can see my short position on here on the SQs. Yeah, we had a little bit of a pop in after hours, so my short position is now technically in the red a little bit, but it's still really far away from my stop. So I'm not that worried about it. Qs rejected off of this 100 period daily EMA. So we're getting a very clear topping formation right here. So I'm expecting Qs to dump. We also have this crossover developing on the MACD. It is possible that Qs can catch a bid and move up again to touch its 200 period moving average in the near term, but I still expect it to drop. If this were to play out, it would probably develop into a big head and shoulders pattern, which if you actually look at the 1 hour chart, you'll see that the Qs already made one. Where I have this big circle, you actually have a head and shoulders. So I know my chart's like really, really messy, so I apologize for the dirty chart. But hopefully that satisfies your guys' curiosity for my views on the Qs. Nvidia, I'm going straight for I'm going straight for a price target of 120 on Nvidia in the next 3 months. I think that Nvidia's performance is about to take a huge hit. They did get this descending wedge on their they did get a descending wedge on their overall formation for the market, but now I'm starting to think that it's actually much, much bigger than that. So I think that they're actually at the top of their market right now and that they're going to sell back down to the bottom of this channel before bouncing. Probably won't actually break out until early or middle of next year. That's where I see this going. Right now, Nvidia's earnings are just so disappointing. And they dropped their expectations, by the way. That's another thing that I have yet to mention. Their expectations from Wall Street dropped so much. They still didn't beat. They dropped their expectations 3 times in this year alone. They still didn't beat on this quarter. This was the major earnings contraction that I was counting on for Nvidia. Yeah, they barely beat on revenue. Their revenue revisions have been so awful that the market, like their revenue revisions happened during this period of the market, like shortly after their Q1 earnings. And their Q2 earnings were already bad, and you can see that the street hated it. And now their earnings are even worse after a revision downward. So the expectations from the company are still not being met. They barely beat revenue. No problem, Bananarama. That's an awesome name, by the way. I really appreciate it. Well, guys, before we go, I'm just gonna send one cactus for Nvidia. Oh man, Nvidia screwed up so bad. This is not a good look for them. Okay. Yep, I'm going to go ahead and close the stream out. I am hoping I will get another market update out tomorrow morning for you guys to let you know what position changes there will be for the other sectors. But we're already in position to take full advantage of this move in the market. I don't care what Nvidia does in the short term. I am going to trade this short no matter what. Nvidia's performance is terrible right now. So I don't want to get knocked out of my trade on volatility alone. If anything, I'm going to look for an opportunity to average down if for whatever reason Nvidia gets really volatile in the morning and average down on the trade because good Lord. We'll worry about that. We'll worry about that trade tomorrow. If Nvidia does end up gapping up for whatever reason tomorrow, I'll just use that as my opportunity to add to my short positions. I'm not taking a stop on this trade. Please be aware that this trade in particular that's in front of you is on a paper account, so this isn't with real money. I do anticipate that Nvidia will get really volatile tomorrow after this, but I'm just full confidence that Nvidia is not going to perform well going into next week. Thanks, Bananarama. Thank you guys for attending the stream. I really do appreciate it. If you guys wouldn't mind leaving a like on your way out the door, subscribe if you're not already a member of the channel, and consider joining Hell's Trading Floor at hellstradingfloor.com, where you can join our Discord at discord.gg/hellstradingfloor. I will see you guys next time, but until then, have a hell of a time in the markets. Good night.